Plug Power Inc. traded at a closing price of $2.18 on the NASDAQ, gaining 5.31% or 11 cents during the session, with after-hours trading ticking up toward $2.23 as markets position ahead of the company's Q2 earnings announcement on Monday, August 10, 2026. While the recent 5% bounce looks like a classic pre-earnings speculative pump, the real story here is not whether Plug Power beats a low earnings bar, but whether its shrinking cash reserves will force another round of brutal equity dilution before its hydrogen infrastructure can produce positive gross margins. Most retail investors looking at Plug Power Inc. see a beaten-down clean energy darling trading near historically low levels, assuming that any positive policy shift or tax credit update will send the stock soaring back toward its former heights. The market expectation is that hydrogen is an inevitable piece of the global decarbonization puzzle, and therefore buying a supplier at $2 is a high upside asymmetric wager. However, the reality hidden inside the financial statements reveals a far tougher truth. Plug Power has been burning cash at an unsustainable rate, relying on complex capital market mechanisms to survive, while selling fuel systems at negative gross margins for multiple consecutive quarters. If you open any popular trading app today, whether you are using Robinhood for retail trading or placing orders through an interactive brokers platform, the sentiment surrounding hydrogen equities is deeply divided. Wall Street analysts currently maintain a hold rating on Plug Power stock, with target prices scattered between $2 and $5. That wide dispersion reflects complete uncertainty over liquidity. Investors checking their individual brokerage accounts on the Robinhood app or through SoFi Active Investing often group high-beta clean energy plays alongside high-momentum tech equities like Tesla stock, Apple stock, or Nvidia stock. Yet the underlying economics of Plug Power stock could not be more different. Unlike tech giants that generate massive free cash flow to fund research and expansion, Plug Power must constantly raise outside capital to construct green hydrogen plants, buy cryogenic equipment, and subsidize its fuel delivery network. Looking closely at recent stock movement, Plug Power stock has experienced sharp daily swings on heavy trading volume. In recent trading sessions, daily volume topped 54 million shares, well above historical baseline averages, indicating intense institutional positioning and active short covering. Over the past 3 months, the stock has slipped over 30%, touching a 52-week low near $1.41 before staging a technical rebound back above $2. Institutional activity shows a stark divide in conviction. Filings reveal that quantitative firms like Dimensional Fund Advisors significantly increased their position in Plug Power stock, while traditional institutional managers like First Trust Advisors trimmed their holdings. This tug-of-war illustrates the core dilemma. Systematic buyers see deep value metrics and high short interest ready for a mean reversion pop, whereas fundamental asset managers fear the long-term drag of structural losses. When retail traders check their portfolios on Fidelity Investments, SoFi Invest, or through a Schwab Intelligent Portfolio, they often wonder if short interest alone can drive a prolonged rally. While short squeezes do happen, sustainable recoveries require fundamental cash flow improvement. For Plug Power, recent macro pressures have added fuel to the fire. Rising interest rates over recent years made financing large-scale infrastructure projects significantly more expensive, while shifting regulatory guidelines created delays in clean hydrogen tax incentive implementations. Furthermore, temporary pauses on data center infrastructure approvals in key states have injected near-term volatility into clean energy power projections. Comment below how many shares of Plug Power stock you currently hold in your portfolio and whether you are buying, holding, or selling at these levels. To fully grasp why Plug Power finds itself at this critical junction, it helps to examine how its core business actually operates. Plug Power builds an end-to-end green hydrogen ecosystem, covering production, storage, delivery, and energy generation. Its legacy product line, GenDrive, supplies hydrogen fuel cell systems to power material handling equipment like electric forklifts used in major distribution centers operated by massive retail corporations. The company expanded beyond material handling into GenFuel hydrogen refueling infrastructure, ProGen fuel engines for heavy vehicles, and GenEco proton exchange membrane electrolyzers designed to split water into hydrogen and oxygen. In early 2024, Plug Power operationalized its flagship liquid hydrogen plant in Woodbine, Georgia, capable of producing 15 tons per day, followed by international electrolyzer shipments to major European industrial refineries. However, historical financial reports show a long pattern of negative operating income and heavy cash burn. The core problem has been fuel delivery margin. For years, Plug Power agreed to supply liquid hydrogen to its forklift deployment customers at fixed contractual prices. When third-party hydrogen sourcing costs spiked and supply chains snarled, Plug Power lost substantial amounts of money on every kilogram of fuel it delivered. That created an ironic structural dynamic where the more customer sites Plug Power deployed, the more cash the company lost. Management launched restructuring programs including Project Quantum Leap, aimed at cutting operating expenses, consolidating facilities, and raising prices on customer contracts to bring fuel margin toward break-even. For modern self-investing enthusiasts using online investing sites, comparing options across a Fidelity brokerage account, SoFi stocks, or an Interactive Brokers trading platform requires weighing this historical baggage against future potential. Many investors who practice online investment management through an intelligent portfolio or automated SoFi robo-advisor model tend to avoid unprofitable micro-cap names due to execution risks. But for individual traders who prefer direct stock selection, Plug Power stock remains one of the most visible clean energy tickers on the market. Looking toward the future, three distinct scenarios will dictate where Plug Power stock trades over the next 12 to 24 months. The bullish catalyst relies on execution and margin expansion. If the Georgia Green Hydrogen facility and additional production sites operate at full capacity, Plug Power can replace expensive third-party fuel with its own lower-cost green hydrogen. That shift could turn gross margins positive, drastically reducing quarterly cash burn. If combined with final favorable Treasury guidance on clean hydrogen production tax credits, institutional money managers using Fidelity Wealth Management Services or Interactive Brokers stock trading tools could re-rate the stock toward historical mid-tier valuations. The neutral or sideways scenario involves slow operational progress met with ongoing dilution. Under this outcome, Plug Power continues to improve gross margins incrementally, but cash burn remains high enough that management must periodically issue new equity or debt. Shareholders trading through Robinhood Investments or SoFi Active Investing would see share price gains capped by an expanding outstanding share count. The bearish scenario stems from liquidity stress. If unrestricted cash continues to drop without a corresponding drop in operating losses, Plug Power could be forced to seek expensive emergency financing or restructuring, which would severely penalize existing equity holders. Every online investment choice comes down to assessing whether popular expectations align with financial reality. The popular narrative surrounding Plug Power stock suggests that clean hydrogen adoption will automatically bail out early pioneer companies. The reality, proved by recent trading swings and financial disclosures, is that market dominance means very little if cost structures fail to support sustainable cash generation. While traders utilizing Robinhood stock trading, SoFi trading platform features, or a Fidelity mobile app can capture quick profits on pre-earnings volatility, long-term investors require clear proof of positive operating cash flow. Plug Power stands at a definitive crossroads where narrative promises must yield to balance sheet execution, making every upcoming earnings report a critical test of operational survival.